Greetings, everybody. We're going to start talking about Chapter 6, and really, this chapter really is going to focus on getting clients, the audit planning process, learning how to understand the clients, and then checking out the risks of this taking on this client, and then figuring out the audit program. So this really gives you an overall picture of the audit process. So we're going to start off here. How does a CPA firm go about obtaining clients? Oftentimes they will be seeking you out, but in the gist of seeking you out, you will submit a proposal, and through that, the audit committee is ultimately the portion of the company that does hire you, and fee arrangements are made through the audit committee. It is very important that you have the ability to communicate with the previous auditor. You do need to ask the client's permission, written permission, in order to be able to communicate with the previous auditor. And I would be one to question if they do not allow that. Some of the key topics you would want to talk about relate to their interactions with the client. Integrity of management is a very significant issue to address. You may inquire about any disagreements they have over accounting principles, and anything related to government governance and non-compliance with laws. You may discuss with them about their communication with management and those concerning internal controls, and what types of deficiencies or weaknesses there were in internal controls. An important topic to address is why the change. Does the predecessor or previous auditor have an understanding of why the client decided to make the change? And so being able to communicate with that previous auditor is just really, I would say, a requirement in order to take on that client, so you know what you're walking into. In this chapter, we're going to go through the entire audit process. Now, again, this happens after you sign on the client. But the steps right now we'll look at: planning the audit, gaining an understanding of the client and the client's environment. Also, real important, the client's internal controls. Checking out the risks, potential risks of material misstatement. And then from there, designing audit procedures, performing procedures, ultimately completing the audit and issuing an opinion. So once the auditor or the client has been secured and an engagement letter has been signed, the important piece here is to begin planning the audit. So as you see here, planning the audit involves a degree of really developing an understanding of the client. And we'll talk about that in length. And then from there we'll move on to checking out various risks and the types of procedures that we will complete, and what's involved in completing the audit and writing the opinion. So this is a real detailed document of understanding the various processes. So in planning the audit, first step is really gaining an understanding of the client. or with the client of what truly will the engagement involves. So when we deal with engagement letters, the engagement letter will clearly spell out responsibilities, expectations, and significant issues as it relates to the liability and the responsibility of the various parties. You won't do this and fill out this engagement letter unless you're able to accept this client due to independence issues, and as long as you've talked with the previous auditor and you don't see any significant management integrity issues. And you'll also want to make sure everyone, as much as you're able to understand, is aware of the engagement letter and specifically what is to be conducted, or the services to be provided, and the timing of those services. So with this engagement letter, which is basically a contract, you're going to include the entity, those responsibilities that management has as it relates to the financial statements. You're going to be very clear on how management's responsible for the internal controls that they're in place and that they are operating. Management is responsible for any compliance with laws. Also, you'll make it clear that any documentation or information that is needed to perform the audit is going to be available to the auditors from management. And then at the end of the audit, it's important that management understands that they are going to need to provide representations that any adjustments discovered that were discovered weren't material. So it needs to be spelled out specifically the responsibilities of management. And then the auditor, of course, has some responsibilities here. They are being hired or engaged to perform an audit. And they will be clear that they're going to perform this audit in accordance with generally accepted auditing standards. The auditor is also required to gain an understanding of the internal controls of the client and to plan the audit and to spell out the nature and the timing and extent of various audit procedures and communicate those in accordance to GAS, generally accepted auditing standards. So some things that can be included relate to any client assistance or needing specialists, how the internal auditors may be utilized, fees and billing. So the more you spell out, the better it's going to be for you and the clearer the expectations. So as far as once the engagement letter is completed, the next portion of the plan is to really get a strategy in place to develop this audit plan and to determine how much of the client staff you will be able to use and what other needs will you have for other CPAs, any specialists involved in the audit. And then from there, depending on which year of the audit you're conducting, if it's the first year audit, of course you have to communicate with the previous auditor, and you have to also establish those beginning balances on the financial statements because if you've not conducted this audit before, you'll need to get those in place. For previous audits, you're going to have those in your working papers from the previous year. Another important aspect of planning the audit is to really gain an understanding of potential risks at stake here in this particular client. So you'll develop this risk assessment or analysis by looking at a variety of items. One may be talking to management, talking to others within the company to really gain an understanding of potential factors that you need to be concerned with. Another will be taking a review of various analytical procedures. You're really here trying to just gain an overall understanding of the client's environment, and what are the client's objectives and strategies related to the business. What types of business risks are in place, and also really understanding how the internal controls work. Any types of communication that can be understood from outside the company really do provide another ear on understanding the company and the risks associated with the company's specific area. A couple items in understanding the company relate to the various sector of the company. So understanding what type of position they have in the industry. So as far as the overall types of other companies in the competition, how competitive this industry is, what type of structure the company has. It's great to see a flow chart to see how the organization has their flow and hierarchy. Understanding their accounting policies and being able to see written provisions of these policies and procedures is a great idea. Who owns the company? How is the company formed from a equity perspective? One needs to be really familiar with what the company is providing in terms of products or services. And if there are some business processes that need to be understood. So when you're dealing with auditing companies, each sector has a unique transactions and unique situations that involve specifically a certain industry. So being able to audit a similar type of industry really makes a CPA firm proficient in that sector of the economy. Understanding those internal controls, again, are paramount. So looking at the competitive environment, seeing how the competitive environment plays out in the economy, understanding the relationships between vendors and customers. Technology is ever-changing, and it is really crucial to be aware of how technology and advancements do affect the client's business. What laws, what regulations are in place that have a direct effect on this client? How's the economy doing as it relates to the client? And attractiveness of the industry. The greater the barriers to enter this industry, the harder it is to allow for other companies to just join in. So seeing the barriers helps an auditor understand potential upstarts of other potential competitors. What types of competitors are out there and how do they fall in line with your client? And basically, what is their position in the industry as it relates to suppliers and customers? So basically, the purpose of developing this overall audit plan is to come up with some objectives, and then as a result to understand various strategies and what actions are going to be in place that achieve these various strategies, understanding the client's various business risks and being able to see barriers related to those risks, being able to review budgets, performance indicators, performing variance analysis, and segment performance reports are other great tools that provide you with additional information in gaining an understanding of your new client here. Now, when we talk about various internal controls with a client, we need to know what controls currently even exist in the company, who performs those controls, and then we would want to have an understanding of the types of transactions that currently are utilized with this company and how those transactions get processed and recorded, and what type of documentation is kept as it relates to those transactions. Various manners in which an auditor may understand a company relate to just asking, talking to management. And then there are various guides out there, various industry guides you can look at, and just get on Google, check news stories, look at various journals to see what is in the news related to the government, your client. Government pubs, previous reports and SEC filings also give you additional information. If you can access the prior year tax returns, that provides you with a great insight as to the profitability or any potential concerns. Take a physical tour of the company. Great way to just gain an overall feel of the individuals and the locales. After that, performing analytical procedures will give us an overall feel of the analysis of various accounts and between years, understanding of the changes in accounts between years. Now, when we talk about materiality can be a subjective view. And this is why the skill of an experienced auditor or manager is needed. Materiality is going to come in the form of subjective and, or I should say qualitative and quantitative forms. So materiality is something that always needs to be in the forefront of the auditor's mind in really continuing with the audit and always evaluating the findings of an audit. So we're going to talk about what materiality means. The magnitude of an omission or a misstatement of financial information that, in the light of surrounding circumstances, makes it probable that the judgment of a reasonable person relying on the information may have been changed or influenced by the omission or misstatement. So it would be an a misstatement enough to where the reliance on this information by a reasonable person would change as a result of this misstatement. So whatever decision or determination was made would be changed as a result of this information. Now, the PCAOB interpretation is a fact of material if there is a substantial likelihood that the fact would have been viewed by the reasonable investor as having significantly altered the total mix of information that is made available. So when we look at a potential risk of material misstatement, we've got to look at the overall picture of what could go wrong and how likely is it could go wrong and how much is involved of this potential issue going south. We've got to look at types of risks, such as inherent risks that we discussed in Chapter 5, and fraud risks. We need to be aware of potential manners in which fraud could occur. From there, we'll look at conducting or designing audit procedures. Now, when we have to take some time to stop and look at fraud risk, we need to look at two types of fraud. Management fraud or misappropriation of assets. So, looking at fraudulent financial reporting or looking at defalcations. So, we would gather together among the CPAs or the auditors and discuss potential issues as it would relate to fraud, ask management, could talk to other personnel, and then by the analytical procedures we can develop a risk assessment in how this could affect us. One needs to look at the opportunity for fraud. We need to look at incentives that fraud could be committed and the climate or the attitude management has towards potential misstatements.